All right, so the FOMC meeting passed. Did we get good news? Did we get bad news? Well, we're going to talk exactly about that today because I think it on the face may have gotten good news, but we also got something kind of hidden in the background that I think a lot of people are ignoring that I want to focus a little bit more on because like I said, it's been a little bit surprising to me how this has just kind of been glossed over by so many people because there's one kind of number or one stat that people are looking very, very closely at and they're hyper fixating on. And I think this could mean kind of the market's going to get a little bit faked out by what we could be seeing later on. So we're going to be going through that today. First off, we're going to just kind of take a quick look at the crypto market and what we can see. Obviously a very green day today. People were very happy with what they heard. Again, we're going to be talking about this in a second, that there might be more to the story here, but people were very happy with what they heard about coming from the Fed today regarding inflation and the FOMC meeting rates, all that type of stuff. And so what we can see, obviously, Telcoin kind of being the clear winner here, being the one that's up the most. But we can see, XRP, Solana, Ethereum, Bitcoin, Helium. What else we got? Sui, we've got Jasmy, Tau. A lot of these, up, doing pretty well and kind of having a nice week so far, or a nice day so far, and then obviously a pretty nice week as well. Pi actually kind of being the only one that's down a meaningful amount this week. We've got, Story Protocol, Hex, and Tia kind of also down a little bit. But we can see a lot here up actually pretty nicely. We've got Ton and Cake, OKB, Atom, and EOS kind of being the main ones that are kind of up the most. But we are also seeing, Sonic doing pretty well, Uniswap, Kaspa, several others here. ETH up almost 8%, Solana up almost 8%. We can see Bitcoin up almost 3%. So, overall, a fairly nice relief rally coming from what has otherwise been a pretty rough couple of weeks and even like longer than a month. If we do look at the month, obviously things are still very, very red, even after some of these bounces that we have seen. Really, really strong projects like Sui still down almost 25%, Ondo down almost 30%, Hyperliquid over 40%. We've got Ethereum 25%, Solana almost 25%, Bitcoin 11%. I mean, some pretty decent some pretty decent pullbacks that we've seen in the market since kind of the beginning of the year so far. Now, I want to kind of take a pivot now that we've kind of got a general sense of kind of where the market's at on kind of the day, week, and month. I want to take a general pivot into kind of going over and breaking down this FOMC statement because, like I said, there's one kind of piece in here that I think people are really grasping onto and kind of waving the victory flag around, and it's exactly this right here. Beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. All right, so what does this mean and why is it a big deal? Now, the reason why this is important is we can actually go back and we can take a quick look at a chart that we've been to before. This is the balance sheet assets, or like the total assets of the Federal Reserve. As we can see, when COVID started, the Fed's balance sheet was around 3.76 trillion. During COVID, they absolutely exploded the amount of assets held on the balance sheet for the Federal Reserve to kind of try and balance out prices and kind of keep them propped up a little bit to prevent any like too crazy of a meltdown from happening. And we could see that the balance sheet actually got up to almost $9 trillion. Well, since then, and this period was known as quantitative easing. Well, since then, we've seen a period of quantitative tightening, which is essentially a systematic selling off of all of these assets that were purchased from basically like 2019 up to like 2022. And then we could see that basically from 2022 until now, early 2025, these have been sold off over time. Now, this is putting institutional level sell pressure into the market. We can see here, we topped at almost 9 trillion. We are now down at about 6.75 trillion. That means we've seen almost $2.25 trillion dumped back on the market, essentially like kind of suppressing price action a little bit, but that's also because they were using that to kind of prop up price action in a period of economic uncertainty, namely COVID. And so what we are essentially getting out of this statement from the FOMC is that they are expecting to reduce the rate of selling off to a much, much slower pace than what we have seen previously. And so the reason why this is important is because, again, with less stuff being sold onto the market, there's less kind of built-in innate sellers in the market. And so because of that, there should be kind of, the balance of power might shift more towards buying pressure overall. Now that's kind of the main takeaway here as to why people think this is important. And it is, of course, important because, again, what we're looking for overall is liquidity going up. I mean, a lot of people are saying, if liquidity goes up, Bitcoin follows. We've seen this actually very, very frequently in the past, that this does generally trend together. And so having that type of claim isn't necessarily unreasonable. And so this is kind of the first step to it, right? We stop quantitative tightening. We potentially even start quantitative easing again. Interest rates drop, a lot of that type of stuff. Now, today we did not hear anything about interest rates dropping. All we heard about is essentially them wanting to keep the Fed funds rate constant, at least for right now, but they are starting to slow quantitative tightening, which again is kind of one method that they have of kind of playing with the market and putting their finger on the scale a little bit. Now, if you are interested in kind of learning about some of this stuff in a little bit more real time, I actually do have access to my Discord server here on Patreon. That link is in the description below. Some of the people who are in my Discord were actually asking me kind of some questions about this kind of real time. They were getting kind of a first look or kind of a first scoop of my thoughts here. Obviously, I do have a video and I do constantly make videos that all of you have to watch, but obviously they are a little bit delayed just because I have to record them and get them out and all this type of stuff on top of all my normal real job and all this other type of stuff I can't always be immediately right on it. But the Discord does give people a way to kind of have a little bit more like immediate and early access to some of my thoughts, like things like this that we saw come out today. So if you are interested, just check the link in the description below to the Patreon. You can go ahead and get signed up. I'm always looking to have new people in the group. It's fun to kind of have kind of a more community type style there where I'm not just talking at people. I'm actually having like a real conversation, which is nice. So if you are interested, like I said, link in the description below. Now, moving on, we need to kind of talk about and discuss like, well, what does this mean for Bitcoin, right? Well, generally lower interest rates, cheaper money, or even like, more inflationary money, a lot of this type of stuff is generally good for Bitcoin specifically as a store of value, because it is, again, a store of value. Now, this can be good for Bitcoin and kind of bad for the rest of the crypto market, because usually the rest of the crypto market wants cheaper money, which again still is achieved by lower rates and quantitative easing. But if we start to go into periods of economic uncertainty and the Fed is kind of reducing some of this, reducing some of these like fiscal and monetary tools to help combat a weakening or an otherwise weakening economy, then that can be good for Bitcoin, but maybe bad for the rest of crypto. So that's something that we do kind of need to keep an eye on. If we do go ahead and look at the Bitcoin chart, we can kind of see exactly that. We actually saw kind of a little bit of a nice pump up after the news today, which again, we'll go into why I think this might be a little bit misguided. But what we can see is we did see that little bit of a pump up. We actually did get kind of almost immediately rejected. We had this trend line drawn. If you want to go back several days, you can see that I did draw this trend line in one of my videos. I haven't really touched it since, but we can see it actually pretty cleanly got rejected off of this trend line. So not building up quite enough momentum to get through this trend line. I'm imagining at some point we probably will, but again, who knows for sure. At this point in time, that's kind of what we're waiting for. Hopefully we can get above it. If we can't, obviously, the longer we go, we'll probably get pinched in between this level of support that we have bounced off of and this descending trend line. And then, one of them will have to give. We'll have to see which one that is. So anyway, at least for right now, we were starting to see a little bit of like, positive and bullish momentum kind of entering in over the past week or so. Getting rejected off this a little bit, but again, obviously, we've seen, red candles here and there. So maybe we start to see some more bullish momentum and we see a push up maybe towards this 91K, maybe even up back to the level that we were holding kind of previous to the fall, which is around kind of that 94 to 96K. That obviously would be a great place to be. But again, we just never know for sure, particularly with what we're seeing in the economy and how things are potentially weakening slightly. We always have to kind of bear that in mind. But what we also can see from an RSI perspective, things looking about neutral here. If we're looking at the Bollinger Bands, things also looking about neutral here, as we were mentioning when we saw kind of the collapse here, and also some of the wicks out of this Bollinger Band to the bottom here, as well as oversold. This is usually a decent-ish time to buy. Again, not always the absolute bottom. Like, for example, if you would have bought here when you were showing way overextended on the Bollinger Band, and overextended on the RSI, it was not the Pico bottom. This was the Pico bottom where we actually did not get an oversold signal here from the RSI, but we did pop out of the Bollinger Band. But we can see that this was a relatively decent time to buy, and especially if you were taking a short-term trade, it would have been a nice place to sell, kind of even in just a couple of days here. So something just to kind of think about if you are trying to get into some more short-term swing trading, things like that. Again, another thing we can see is when the Bollinger Band squeeze, that usually indicates volatility. Again, which direction we don't know for sure, but something to think about. So over time, we're kind of starting to see that if you can use RSI and Bollinger Bands is a somewhat reasonable level of indicator of what price might be doing in the short term, particularly when you're using the daily, because it's very, very hard to swing RSIs and Bollinger Bands and stuff like that far out. So when you see something like this forming, it's usually a pretty good indicator of a fairly macro move. So anyway, if you are interested, I do have that link in the description below to trade BTCC. I also have links to WEEX and Phemex if you are interested. With BTCC specifically, they do have a 10% bonus on first-time deposits, which is a really, really good deal. Extra bonuses of up to $10,055, which again, also a very great deal as well. And then no VPN or KYC necessary. So BTCC, of course, looking to throw a whole bunch of money at you if that is something that you are interested in. And then we do also have a link below for WEEX and Phemex. Phemex, I believe, doing a $4,800 sign-up bonus. And then WEEX, I believe, is up to 20 or 30K, of total deposit bonuses and sign-up bonuses and trading bonuses, all the different things. WEEX actually giving a bunch of money away if you are interested in getting signed up. But the thing that is nice about BTCC is they have that 10% guaranteed bonus that you can always count on, which is pretty nice if you are looking to kind of build up just some extra money to trade on. So like I said, if you are interested, just feel free to check the links in the description below, kind of see which one kind of works out for you and stands out, and then you can kind of go on from there. Now, moving on though, I want to go into this kind of last piece of information that I think shows and maybe brings us down to earth a little bit, right? Because if we've been so far, we can see, oh yeah, things are looking great, quantitative tightening stopping, interest rates are looking at getting 1 to 2 cuts for the rest of the year. Some people are saying even up to 4. I think that might be a little bit aggressive, but again, that's kind of what some people are speculating on. The Fed is definitely kind of taking more of a wait and see type of approach. There's a lot of things like that going on that I think are pretty bullish going on. However, what we can also see, and this is kind of the little caveat, like the add-on that was added in the Fed or the FOMC meeting, that I think a lot of people just, for whatever reason, which is a little surprising, they just kind of glanced over, right? And so we can see exactly that right here. We can see the Fed is making multiple revisions to their 2025 economic data projections. They cut GDP growth from 2.1% to 1.7%. Again, 2 to 3% GDP growth is generally kind of the target. So 1.7% kind of by all means would be kind of underperforming. It's not negative, so it's not necessarily like in recessionary territory, but definitely underperforming what would be kind of expected for a normal economy here. Also, they raised unemployment forecast from 4.3% to 4.4%. Not too crazy here, but this could, again, we see unemployment. Usually this stuff is kind of not forecasted or not expected. And so we can see this number rise very, very quickly, kind of all at once, if something does happen. We also can see PCE inflation forecast from 2.5 to 2.7%, and then core PCE inflation forecast from 2.5 to 2.8%. This is a little bit strange because we actually saw inflation data decrease in the last inflation report that we got, but the Fed is actually expecting that we see higher levels of inflation. Now, again, they're aiming for 2%, still kind of above that, even right now at 2.5%, but now they're raising it even higher, closer to 3%. Again, not too terrible, but definitely, above, if you consider it in percentage perspective, almost 50% above the goal. Not exactly the greatest metric there. So essentially kind of TLDR here is what we can see is the Fed is seeing higher inflation in a weaker economy. Now, why people are ignoring this, I don't really understand. This could be due to some manipulation in the market. Obviously, there are a fair bit of shorts kind of at like that 90,000 range. Maybe people are trying to kind of see a push up to like that 90,000 range where we do see Bitcoin kind of liquidate a lot of those shorts. And then potentially we see another move back to the downside. But what we are seeing kind of longer term is weaker economic conditions, which is again not necessarily kind of like the best case scenario for particularly altcoins. This can be okay for Bitcoin, and I think for Bitcoin itself this is good news. But again, if we go back to the crypto bubbles, we can see on the daily overall pretty green. People are pretty happy with the news that we've seen. And I can't help but think that this is maybe a little bit of a fundamental misunderstanding of what is actually going on in the market. People are locked in on the interest rates and QT/QE, and that's it. They don't understand all of this other economic data that's coming out. So this is something that I just want to bring you today. Make sure that you're kind of aware of what's going on. Again, there's so many things going on with kind of macroeconomics. It's all kind of a little bit of like a black magic that we don't really ever know for sure what's going on. And so, things can always change over time. But I did just want to bring this to you guys today, just so you can think about it, you can digest it, you can kind of form your own opinion. Again, nothing that I say is financial advice. I just try and bring you some data and kind of break it down in some ways that hopefully are a little bit more easy to digest and understand than what you might find just kind of stumbling around out there, because I do know that it is definitely a difficult space, especially if you're trying to get into it for the first time or you're relatively new. I get it. I've been there. I've done that. And that's ultimately why I make YouTube videos is to hopefully help you guys understand this a little bit better. So like I said, hopefully this is helpful. I would say let's maybe not just throw all caution into the wind just because we've seen a couple of days of green candles. Again, we need to be careful. The kind of underlying macro issues are still there. I am still long-term bullish in the sense that I think from a kind of fundamental perspective, so many amazing things are happening for crypto that we've literally been begging for like 5 to 6 years plus at this point. It's happening, right? It's just we have this kind of like short to mid-term like economic issue kind of standing in our way. It will get fixed at some point when we don't know for certain, but it will get fixed at some point. And when it does, I think that's when we'll be really, really happy with what we're seeing in crypto. So anyway, those are kind of my thoughts overall. Hopefully you found them useful. If you did, a like and a subscribe really, really does help. Also, if you have any comments, questions, thoughts, feelings, whatever, drop those in the comment section. I do read and respond to all of those. So if you have anything you want me to see, that'd be a great way to do so. And then again, the links for, if you want to trade, got all the different trading links. If you want to join my Patreon community, I've got the links for all of that type of stuff too. Like I said, all that in the description below if you are interested. So anyway, thank you guys for tuning in, and we'll see you in the next one.